Good afternoon, I'm Carol Harmer from the International Trading Institute, and what I'm going to do right now is just walk you slightly through the US stock markets, where you can see there was loads and loads of panic last month, okay? And what I'm going to try and show you is how to get things into perspective. Now, obviously, there was a lot of noise last month. There was a lot of to-in and fro-in. This isn't unusual in the stock markets, okay? If you're a regular trader and have been looking at these stock markets for many years, you will understand that they don't just go up in a straight line. And what we always say is they go up by the stairs, down by the escalator. And that's what happens. You get a bit of news that comes out. I mean, I remember when Trump was in before, we traded the stock markets, and it was an easy time to trade, because the Far East had pushed the market down over 1,000 points. We knew Wall Street would buy it back, so we just used to come in the morning and buy it back, and find that it worked out. But you have to have these corrections, and I'm going to show you now on the monthly chart exactly why you need to be able to learn where there is noise coming from and how to avoid it. So here we have a chart of the monthly S&P. Now, I know I'm going back a long while. Well, that's because I'm old, but I'm going back a long while. But you can see that these down moves that we have in the stock market, they're very quickly recoverable. This one wasn't so much, okay? It went down, and it did look like it was gonna carry on, especially after this, the September. But come October, up we come, and away we go. If you look at this one here, if I could get that little cursor out of my way, if you look at this one here, it really has no significance on the monthly chart whatsoever. It really doesn't. Now, I know if you're trading short term, you're going to call me everything and say yes, but at the end of the day, I don't want you to be trading short term. I think it's full of noise. I think you're up against a retail market that just wants to be in and out, and you're up against algos, and you're up against stop hunters. You need to be able to trade strategically. That is the key to trading profitably. You need to trade strategically, and that means that you wait. If you are in the stock markets, for example, if you are, and you're long, as one would have expected, although the monthlies and the weeklies were showing that they were turning. But if you are long of these stock markets and they go, remember this old adage of what I've just said: up by the stairs, down by the escalator. Now, what we want to do at ITI is make you aware of all these pitfalls that you're going to encounter, as you start your road to trading in a profitable way. I would hope that will be pretty soon. I do think that traders have to put in a lot of work. I know I did. I know it paid off. And I know that I would never suggest not putting in the work. If you don't put in the work, you won't get the results you're looking for. We've spoken about this before. People follow people on Twitter. Traders don't put their trades on Twitter. They don't. Why would they want to? Why would they want you to know what they're doing? They don't. Not one person, not one professional trader I know puts his stuff on Twitter. If they do, what they want you to do is pay for it, and they'll tell you what they're doing. Well, you don't know if they're doing it. There's some real scoundrels out there. Now, working with us who are professional traders, and we're professional people, and we've been in the market a very long time, very, very long time. You know, we can see all the pitfalls of where traders go wrong trading short term. But this is why we're going to try and get you to trade a little bit more in the longer term. Okay. Now, when you see the S&P on a daily basis, you can see that today it's gone roaring up. But really, the key area, there were two key areas here, the 50% and the 61.8. If you notice, when it went up and come down, it cuddled those moving averages, and we have broken through the 200-day moving average today, and that is a very important factor. It is. So you can scale that down to a 4-hourly chart, but really don't go past a 4-hourly chart if you're going to learn to trade strategically, because you don't get, although you may get more bars, so you've got more information, you want to be able to look more to the dailies to get the direction, get the indicators correct, get the moving averages, put the Fibonacci levels on. You know, you don't want to be churned and turned, which is what basically you do. So there we are, we're looking at the stock market can go higher. A level I would like to see break is the 78.6 fib, which is at 5849. We're trading at 5834 as currently. I think that the market has got the legs to break higher. I don't see any reason at all. It's done what it wanted to do. It's corrected. It had divergence. It was all looking horrible, and now it's not looking so bad. Okay, so yes, you do have to look at the fundamentals, and you do have to look at what, you know, Trump's doing with China, bless, when he's giving out his little tweets and whatever. But remember, we traded through this in 2019. If you look at a chart of 2019, you'd say, how the hell did you trade through that? Well, it was simple. Come in the morning, buy the stock markets, wait for Wall Street, up it'd go, cut them out, made your money, let Asia shove it down again. You know, it was easy. It was easy. So now I'm going to look at the Nasdaq. I love this market. It really is a cool market. And I think it's very underrated. And what I like to see the market do is when it makes a top, you know, if you, I'm not going to go all into the technical details, but if you measure between this point and just push it down, you can see we come a little bit, we extended a little bit on the downside of the downside target, but we did hit the downside target, which is where you were out. Once we started climbing back up, you go back in, you know, you look at this pattern. Is this a continuation pattern? Yeah, so it's going to go up, and because these patterns are, if you've got lower highs and lower lows, the pattern is bullish. Now, obviously, we have a huge section on patterns, and they are so important to your trading. You know, I can't explain how important pattern recognition is. Okay, just simple pattern recognition. The way you could just get hold of a chart, pull it up, eyeball it, see the patterns. And obviously, when I'm going to be teaching you, you're going to be doing a lot of this work, a lot of pattern recognition, and you're going to be doing homework. I will make sure that you have home. Sound like a teacher? Oh, I am a teacher. You're going to have homework, and because without knowing pattern recognition, what you're doing really is you're whistling in the dark, because others know pattern recognition and they use it extensively. Hedge funds do, pension funds do, you know, they do it, they may be doing it in the long term. but the patterns don't alter, and you can preempt what a pattern is going to do. That's the great thing. And as you get more of a feel for the market, which you will do, as you get more of a feel for the market, and you see these patterns coming to fruition, and you think, I think where traders fail more is that they don't have the self-belief. And you need to, if you don't believe that what you see is what is happening, then obviously, maybe this business isn't for you. But I believe that anybody can be taught technical trading, which is why I spent many years doing it. And I think that once you master just the art of feeling the chart, just having the chart up, strip it, don't have no indicators on it, just look at a plain chart. And once you can do that and pick out the patterns that I'm going to be lecturing you on, and that is one of my favourite lectures, is pattern recognition. When you start to see these patterns form, and they're basic, I'm not saying they're anything exciting, they're just very basic patterns. When you see these patterns form, you can go with it, and you can go with it with confidence. And at the end of the day, that's all we need. We just need you to have the confidence to be able to trade what you're seeing in front of you. You've got to push that button, you've got to press that button, and that only comes with confidence and time. You're not going to learn overnight. It's never going to be learned overnight. It takes years to actually become a stand back, sit back, strategic trader, and to not be rattled by what is going on intraday, 5-minute charts. I mean, please, God, leave us alone. They're for spot dealers only. But what we hope is to be able to offer you our range of expertise. And if you go through and look on our website, and the International Trading website, go and have a look at it, you can see that the mentors that are on there have been, hand selected because of their field of expertise combined is going to make you having this course it's a very good course, and it will make you quite a profitable trader. I do believe that. Okay, well, that's the US stock markets and my little 2-penny thing. So it's Monday. Have a great time, and I will catch you later.